Hi, I'm Lisa Leiter. In Chicago Business Today, the downtown office vacancy rate. Some positive news on the downtown office market. For the first time in almost 2 years, the overall vacancy rate dropped slightly in the third quarter. It dipped to 17% from 17.3%, which was the highest level in more than 4 years, according to CB Richard Ellis. The vacancy rate had skyrocketed over the past 2 years from 11.9% in the third quarter of 2008 as the real estate market crashed and the credit markets froze. Since then, construction has ground to a halt, easing concerns about supply. And so many companies already have made their big recession job cuts and are no longer getting rid of office space. The rate, of course, could edge higher again, but the worst of the market is likely over, says John Dempsey.
We're not happy where we are today, but if you look at the stabilization in the employment, if you look at some positive trends in the financial markets, you're seeing optimistic highlights of what could be a very, very robust recovery down the road.
In fact, net absorption, a key gauge of demand for office space, was positive in the third quarter for the first time since the end of last year. A couple of large deals boosted the market between July and September, including trading firm Getco roughly doubling its space with a new lease in the former apparel center at 350 North Orleans. Dempsey says electronic trading firms have been a bright spot for the market, as has stable demand for top-tier Class A office buildings, and the market is starting to move landlords' way.
If you look at the West Loop and let's say you're a 100,000 square foot tenant, you only have 2, maybe 3 alternatives at the high-rise portions of any building in downtown Chicago in the West Loop. And so that limits your choices and enables the landlords to really hold steady on rental rates. So I think as we progress and as the economy does turn around and people look for better space and better locations, they're going to have a hard time finding it. We don't have a supply problem. We have a demand problem right now. Supply is pretty much in check. So when that demand comes back, and it will, you're going to find some tightness in the marketplace.
Class A space has the lowest direct vacancy rate. It stands at 14.2%, also helping sublease space off the market. The sublease vacancy rate fell to 1.9%. 3 of the 5 downtown submarkets improved in the latest quarter. The East Loop fared the best. North Michigan Avenue fared the worst, with a rise in the vacancy rate, but its rate at 15.7% is still lower than other areas. Well, that's this edition of Chicago Business Today. For more on this story and all your real estate news, be sure to check out chicagorealestatedaily.com. Thanks for watching. We'll see you tomorrow.